Okay, let's jump right into this deep dive. We've got some really interesting source material here. It takes a direct look at two companies in the fintech space, Pagaya Technologies, that's PGY, and Upstart Holdings, UPST.
Right.
And our goal today is pretty straightforward. Just unpack what this specific document presents, see how it contrasts these two firms. We're looking at different financial metrics, ownership details.
And it's useful because this source actually lays out specific pros and cons it sees for each one, gives us a clear framework from its perspective.
Exactly. It's a side-by-side view based on this data. So where does this start? Market cap.
Market capitalization, yeah.
The source points out PGY has the lower market cap. It even gives the figure $1.281 billion, whereas UPST, it's noted here as having a higher market capitalization. Sets the scale.
Yeah, definitely gives you that initial size comparison, at least based on how the market valued them when this source put its numbers together.
Okay, so then it moves into the financials.
Yeah.
Revenue first. Here it says PGY actually has higher total revenue. UPST is listed with lower revenue in this comparison.
Okay, so PGY leading on the top line according to this, but then operating income gets, well, interesting.
How so?
Well, for PGY, it just says higher operating income as a pro. But for UPST, the source lists both higher operating income as a pro and negative operating income as a con.
Wait, it lists both for UPST, higher and negative.
Yeah, exactly. It's a specific, maybe slightly confusing nuance that this particular document includes. It's presenting both sides, perhaps looking at different metrics or time frames within its own analysis. Hard to say without more context, but that's what's written here.
Huh. That's definitely something to note, the source itself flagging that duality for UPST. Okay, what about free cash flow?
That comparison's more straightforward in the source. It shows PGY with lower free cash flow.
And UPST?
UTST is listed with higher free cash flow, so a clear difference there according to this data.
Got it. Okay, let's shift gears a bit. Ownership structure. The source has some numbers on that too, right?
Oh yeah, quite distinct numbers. Insider ownership, for instance. PGY is shown with much stronger insider ownership, 37.14%.
37%? Wow, that's pretty high.
It is, especially when you compare it to UPST. The source lists UPST's insider ownership as lower, down at 13.26%.
Big gap. And does that track with the free float, the shares available for trading?
It does. It's basically the inverse picture. PGY, with that high insider ownership, has a lower free float percentage listed 62.86%.
Meaning fewer shares are, readily trading on the market.
Exactly. While UPST, with lower insider ownership, has a higher free float percentage, according to this document, 86.74%.
So more of UPST's shares are out there, potentially changing hands more frequently. Different setups.
Definitely paints a picture of different ownership philosophies, or maybe just different stages, based purely on these figures from the source.
Okay, so let's quickly recap the pros and cons as listed in this document we're looking at. For PGY.
All right, for Pagaya, the listed pros are higher total revenue and that stronger insider ownership, the 37.14%.
And the cons for PGY.
Listed cons are lower market cap, lower free cash flow, and the lower free float percentage, 62.86%.
Okay. Now for Upstart UPST. The pros listed here.
Pros for UPST according to the source. Higher market capitalization, the higher free float share percentage, 86.74%, higher free cash flow, and that point about higher operating income.
Right, the one listed as a pro. And the cons for UPST.
The listed cons are lower revenue, lower insider ownership, 13.26%, and also that other point we discussed, negative operating income.
Interesting. So pulling it all together just based on this specific source document, it seems to frame PGY as maybe stronger on revenue generation and having that tight insider control, judging by the pros.
While UPST, again, according to the sources listed pros, looks stronger on market valuation, cash generation through free cash flow, and having more shares available publicly.
And we have to keep remembering that slightly tricky point the source makes about UPST's operating income, listing points on both sides.
Absolutely crucial to remember. This is one document's take, highlighting these specific data points and comparisons. It's a snapshot through its particular lens.
Couldn't agree more. It's just what this one source chose to highlight. So maybe a final thought for you, our listener, to chew on. Given just these contrasting points presented in the document, the financial differences, the ownership structures, if you were analyzing companies like these, what aspects from this specific comparison would you personally prioritize?
Yeah, what stands out most to you when you see these specific pros and cons laid out side by side like this? Something to consider.